Right, good evening and welcome to Mortgage Myths and Home Truths webinar. My name's Ian and I'm the Mortgage Direct Manager here at Darlington Building Society, and this is my colleague Anne, who is one of the mortgage advisors at the Society as well. We are recording the webinar, so if you do need to leave, then you can revisit at a later time that's more suitable for yourself, so you won't necessarily be missing out on anything. Tonight we'll be discussing some of the most common misconceptions around mortgages and home buying, while sharing practical guidance and home truths that may help you feel more confident navigating the market. I will ask Anne some of the common questions we get asked by first-time buyers, and Anne will be herself one of our friendly and qualified mortgage advisors. If you do have any questions, then please use the chat facility and we will try to get those at the end of the webinar for you. So firstly, hi Anne, what can you tell me about the different types of mortgages that are available to first-time buyers?
Well, I can tell you lots about them and I'm going to, but first of all, what I just want to say is that whenever you get a mortgage, it's important that you remember that that mortgage is secured against the property that you're going to buy, and that's secured by what we call a first charge on the property, and Darlington Building Society or the lender would have that charge. And what that charge means is that if you don't make your mortgage payments, your home may be repossessed. So it's really, really important that you remember that the security is your property. Okay, and you need to pay your mortgage, otherwise that property may be taken away from you. And if you ever have any financial difficulties with any mortgages, come to your lender directly immediately. I think that's, first of all, just pointing that one out. So there are two ways of repaying your mortgage. You've got a repayment mortgage and you've got an interest-only mortgage. With your repayment mortgage, what you will do is you will pay monthly payments to the lender, and part of that monthly payment will be interest, part of it will be capital. Now, as long as you make all your monthly payments and you make them on time, then your mortgage is repaid at the end of the mortgage term. Okay. The other type of mortgage that you can get is what we call an interest-only mortgage. Now, with an interest-only mortgage, you just pay the interest, okay, and the capital doesn't reduce. So as you can see on the graph there, the interest-only is the red line. You just pay the interest for the term of the mortgage. And at the end of the mortgage term, you have to have the means to repay that mortgage. So that can be from an investment, another property, a pension pot. But all lenders will check that you've got that in place right at the beginning of your mortgage before they'll accept an interest-only mortgage. And it is quite difficult to tick all the boxes that you need to on that. The main way that people repay the mortgages is a repayment mortgage. As you can see on that graph, initially you're paying mainly interest, then gradually over the years, as you get your mortgage statement through, you'll see that your debt's starting to get lower as well. So at the end of the mortgage term, as long as you make all your monthly payments and you make them on time, that mortgage will be repaid in full. You'll own every brick, you'll own every slate on the roof and every cobweb that you didn't get to behind the sofa.
Fabulous. So that's some really interesting information there, Anne. What are the different types of interest rates that are available? So I've heard people talk about fixed rates, variable rates and trackers. Would you be able to just explain a little bit about those, please?
Yeah, of course. Your mortgage could be for a mortgage term of, say, 10, 15, 20, 25 years, and you don't pay the same rate for that whole period of time. Okay, so what will happen is you will break that mortgage down into subsections, if you like. So that could be 2 years, 3 years, 5 years, 10 years, depending on whatever your lender offers. Now, you have different options. You have what we call a fixed rate product. Now, a fixed rate product will do exactly what it says on the tin. It will fix your mortgage interest rate for a period of time, and it doesn't matter what's happening in the world, what chaos is ensuing, what interest rates are doing, you will pay that same monthly payment for that period of time, be that 2 years, 3 years, 5 years, 10 years, whatever that be. Now, a lot of people like a fixed rate payment because they like to know what they're paying. First time buyers particularly like it because they like to budget and know exactly what's coming out and have no surprises. Okay. The variable rate mortgage, again, changes. It does exactly what it says it does. It will change depending on what's happening with interest rates. Now, a variable rate mortgage can go up, and there's no upper limit to how much that can go up. So that can go up forever and ever and ever. There is usually a floor on those discounted variable rates, though, and that basically means that it won't go below a certain interest rate. Okay. With a variable rate mortgage, usually your monthly payment will change from the first of the following month. So you've got no time to get used to any changes if there's increases. You get the benefit of the decreases quickly, but you don't get the benefit, of saving up if there is that big increase. Your tracker rates will track the Bank of England base rate. So whatever the Bank of England decides, if they decide to increase rates or decrease rates, your rate will follow that and track that rate. And again, your monthly payment can change from the first to the following month. So if it's going up, your rate is changing more or less straight away. If it's going down, then again, you get the benefit of that straight away from there. So those are the three main mortgage products that you're looking at with a lender. At the Darlington, we offer discounted variable rates and we offer fixed rates.
Okay, fabulous. So the tracker rate, just so I've understood this correctly, the tracker rate is linked directly to the Bank of England base rate.
It is, yeah.
And then a variable rate is linked to a different rate that's decided by the lender.
Yeah, so the lenders have what they call a standard variable rate, okay, and that's their baseline rate. And a variable rate that any mortgage lender would offer you is based on that rate. So if they decide to increase their standard variable rate when the Bank of England change the base rate, then that's how it will impact you as far as the variable rate is concerned with your lender.
Okay, fab. So one of the other things that we get asked quite a lot about is deposits and volumes, how to save them, how much I need, all that kind of thing. So in general, as a first-time buyer, how much deposit would a first-time buyer be looking at needing to save to be able to get their own property?
At the Darlington Building Society, we ask for a 5% deposit as a minimum for a first-time buyer. Okay, you can put down a higher deposit, 10% or any variation thereof up to however much you want to, but 5% would be the minimum. The more deposit you put down, the less you're borrowing. Okay, so the lower your mortgage monthly payment would be. So I think the bigger the deposit you have, obviously the less that you borrow. But yeah, a minimum of 5%.
Okay, fab. I'm just displaying a little slide there that just shows the kind of different amounts for the deposit. Would that be a kind of common amount that people are looking at saving for a deposit, Anne?
Yeah, I think when you're looking at first-time buyers, most first-time buyers will set themselves the goal of a 5% deposit. And as you can see there, if you're buying a house for 75,000, you deposit 5% deposit is going to be 3,750. So I think that chart just gives you an indication of the pounds and the pence. I think sometimes it's easier to see it and visualize it than it is just to say the numbers and say the percentage.
Okay, fabulous. So what would we say to those potential first-time buyers who haven't got a 5% deposit? What can they do?
I think one of the lovely things that family can do to help first-time buyers is they can gift the deposit. Okay, so we will accept a gifted deposit for a first-time buyer from an immediate family member, and that allows family members to support people to get on the housing ladder, which is our main aim at the Darlington Building Society, is to get people onto the housing ladder, particularly first-time buyers. So I think that's a really lovely way of doing it. If you've got money saved up for your child and you're going to hang on to it, you can gift that deposit to them. So that gives them the opportunity to get on the housing market with that 5%.
Okay, fantastic. So are there any hints and tips that maybe you could pass across to maybe people who don't have someone who could gift them a deposit, or maybe you are struggling to save up for their own deposit? Is there any kind of suggestions or anything that you could make to help those people?
Oh, yeah, for saving, I've got loads of them, loads and loads of hints and tips, but we'll keep it just probably to the bare minimum. I think when you're looking to save your deposit, or if you're looking to buy somewhere, the first thing you really need to be doing is talking to a mortgage advisor, going to your building society, coming to see me, coming to see a colleague, or chatting to whoever you're looking to go to for your mortgage provision. I think once you understand how much deposit you're likely to need, you can start to get your plan in place. And it can be 3, 4, 5 years in the future, but once you know how much you need to save, then you can get your cunning plan into place and you can start and do that. And I think a really good tip is to have an idea of where you're wanting to buy, the purchase prices of the properties there, what sort of deposit you're likely to need, and then work that one backwards and say, okay, if I saved so much a month, how long would it take me to save my deposit? Okay, and then you can work things backwards from there. I think we've got a little slide, haven't we, that shows roughly how long it takes to save. So there you go. So if your deposit was £5,000 and you were saving £500 a month, it would take you 10 months to save up the deposit. If you were saving £200, it would take 25 months. So again, it just helps you visualize how long you need to save for to get to where you need to be as far as your deposit's concerned. And I think one of the key takeaways, I think, from this and seeing how much you need is just looking at what you're spending at the moment. Get your bank statements out, have a look, see how much you're spending, work out how often you're tapping with that contactless, what you're spending it on, and see if you can rein that in. And I think for me, a really good example of that is somebody that I dealt with recently and did a mortgage for. And the affordability assessment, which all lenders look at, we'd looked at that and we're looking at gas, electric, things like that. We use Office of National Statistics figures for first-time buyers to see how much they're going to be paying out. And we looked at how much he was spending with his shopping. And it was a huge amount and we couldn't work it out. So he brought 3 months bank statements in and I'm looking at these bank statements and it's Greg's. So basically this guy walked past Greg's to get to work every day. So he'd get his breakfast there, he'd get coffee there, he'd get sandwiches there. Basically he was keeping Greg's profits going. And when we added it all up, he was spending £300 a month just going to Greg's. And he was mortified because that £300 a month that he was spending affected how much he could borrow. So he went away, he started packing his own sandwiches up. So that's a mum advice from myself as I was giving him. Started taking a flask to work with him, stopped tapping away, came back 2 months later. He was a lot slimmer as well. And he said to me, look, I've done it. He said, and I'm so aware now that when I'm going like that, I'm not seeing it as being real money. So my advice would be, in the olden days, we'd have had pots that we put cash into when we got paid. Nowadays, you've got your bank accounts with all your different individual pots in. Set yourself a budget for your expenditures, for your petrol, for your food, for your going out, whatever. Stick to that budget. And any extra put into your savings pot, make sure that your savings pot sort of is getting filled up, depending on how much you need to save. But don't start taking from Peter to pay Paul. Just have it clear in your head, putting the key in the front door of your very first home and walking in, and just doing these simple little things can get you there. And that's why I do the job I do and Ian does the job he does, because we absolutely love first-time buyers opening that door and getting on the property ladder.
I suppose that the key from what you were saying there is it's not necessarily you need to stop buying a coffee from a coffee chain or stop getting a bacon sandwich here and there. It's having a look at the overall expenditure for the month and looking at that and going, where can I make some savings? And that, I suppose, that could be the gym membership that you never go to. That could be the cinema club that you never visit. There's lots of things that you don't use, but you're still paying monthly for. That when it comes to it, there could be something there that could also help save that deposit.
I think you're right, Ian. And I think one thing to mention as well is that you have to live your life as well as save for your deposit. And when you get your first mortgage, you still need to sort of have that wiggle room so that you can afford to go out and do all the good stuff that you want to do. But I think it's just having that awareness and start early. If you're thinking of buying somewhere in 3 years' time, come and talk to us. Let's have a chat. Let's see if we can set some goals for you and give you some ideas and some hints and some tips. I just think it's really important. The sooner you have a conversation, the easier it is to set yourself that target.
Yeah, little and often, I think is the phrase, isn't it? Really.
Yeah, absolutely.
Fantastic. So one of the other questions we've been asked to kind of cover is around employment types, and self-employed is one of the areas that people are sometimes a bit nervous of, saying I'm self-employed. I can't get a mortgage because I'm self-employed. Could you just explain how someone who is self-employed can still achieve that goal of home ownership?
Oh, absolutely. I mean, we live in a generation where entrepreneurship is applauded and where a lot of people are actually subcontracting. So they'll be self-employed through a different company, especially in the trades, especially in this area. So yes, you can get a mortgage if you're self-employed as a first-time buyer. We would want to see 2 years history of your employment income. But again, we can look at that. And if you are going into the trades and you are thinking of being self-employed and you want to get a mortgage, come and talk to us, because we can talk you through what you're going to need to achieve to get the mortgage that you need. If your accountant is doing the job you ask them to do, then the accountant will make sure that as much of your income is set off against your tax as possible. Doesn't always help you when it comes to mortgages, because we can only take the figure that's sent through to the tax office. So I think it's important, if you're self-employed, if you're subcontracting, you're a first-time buyer, again, come and have a chat with somebody straight away and we can guide you in the right direction.
Fantastic. So being self-employed definitely isn't a block then to being a homeowner.
It certainly isn't. No, we're here to help and support as best we can.
Brilliant. So the next kind of topic that I just wanted to discuss with you is around credit ratings and credit history and things like that. So again, one of the key questions we get asked quite a lot by first-time buyers, so we thought would be interesting to cover, is improving credit ratings or improving credit scores. Have you got anything kind of that you could point anyone in the right direction of getting those sorted, or ways that could happen for them?
Yeah, it's a biggie, isn't it? People do get hung up on credit scores. And I think when I take phone calls from first-time buyers, the first thing they like to tell me is what number they've got on their credit report. At the Darlington Building Society, we don't credit score people. So we are not interested in that number. What we're interested in is you as an individual and your history and how you've managed your finances and how you've managed any credit that you've got or any phones that you're paying for. So what we would do is we would do a credit search on you just to make sure that you've conducted yourself financially in the right manner. We'd look at your missed payments. We'd look at any late payments. Life comes and bites you sometimes. I won't say what I was going to say there, but life does come and bite you sometimes. And, we all make mistakes. We all forget to set that direct debit up. We all do things that we think, oh God, why did I do that? At the Darlington, because we look at people as individuals and we don't have a computer saying yes or no, we look at what's happened and why, and we'll ask you why. If there's a missed payment, how did that happen? It could be, oh God, I was on holiday and I realised I hadn't set the direct debit up, and then I had no internet and things like this. So because there is a person at every step of the way, not a computer, we can look at that information. So we don't tap all the information in the computer says, oh yes or no. We can look at the information you provide. So don't get hung up on the number if you're with the Darlington. There are other lenders like us that do that, but not many. So, be aware with your credit score if you are looking at different lenders. Make sure that when you're going on their websites, they're not doing a soft search or a hard search on you, or that you are aware of what searches they're going to do, because that may have an impact. But like I said, at the Darlington, we will look at each case on its individual merit and we'll have that conversation. So I think that's really important, especially nowadays where everything's immediate answers through a computer. There will be a person looking at your case and going, right, okay, well, let's have a look at this and let's have a look at that and let's see what we can do as opposed to what we can't do. Okay,
fab. So again, I suppose that the key from that is just because your credit rating might not be the highest, it doesn't necessarily mean you can't purchase a property. It just means that you may need to look at a different lender from a high street lender who would automatically be able to credit score if your credit score was high.
Yeah, absolutely. And I think the other side of that is if you've had problems with your credit in the past and you don't know where to go and you're sort of thinking, well, how long will that stay on my credit file for? How long will that impact me for? Come and have a conversation with us. The sooner you have these conversations, the sooner you can set a plan in place. So it could be that we may not be able to do anything for you for a couple of years, but you'll know that and you can plan towards that. And while you're doing that, you can save more deposit and then borrow less and pay less. So I think the key, again, is just come and talk to somebody about mortgages as soon as you possibly can, because you'll get the information that you need sooner. Knowledge is power.
Fantastic. So in terms of that, who would you kind of say to speak to first? Would you say kind of go to an estate agent first, a solicitor, a mortgage broker, direct to a lender? How would you kind of suggest that a first-time buyer would go about starting to look at properties and maybe thinking about what it is that they're wanting to do in the future?
I think the first step is talking to your mortgage lender. So don't start going on Rightmove and looking at all these amazing properties and imagining yourself redecorating and the Pharaoh ball and the faffing with your cushions and things like that. So, which I am a big fan of faffing with cushions. So, not dissing that, but come to your mortgage lender initially. Okay, have a chat with them, because what we will do is we will take you through an affordability assessment where we will look at your income, we'll look at your expenditure, and we'll look at your whole financial history, and we'll look at how much you can borrow. Then you can tell us how much your deposit is, how much, then we can work out how much you can lend. So we're working out a maximum amount that we can lend to you. Okay. Once you know the maximum amount you can lend, then you can look at properties and go, right, okay, can't look at those because they're too expensive, but I can look at these. What we would then do is we would do what we call a decision in principle. So we would give you a certificate. It's not as grand as a certificate, but we'd give you a piece of paper that said we would lend Joe Bloggs X amount of money, subject to meeting a full underwriting assessment. So that's once you've seen the mortgage advisor, everything goes through to a mortgage underwriter, who's a risk assessor, who gathers all the good information together and goes, okay, I'm happy to write the check for that mortgage. Basically, I'm comfortable with all the risks there. And subject to evaluation. So when you're buying a property, that security, as I said right at the beginning, is the property that we're lending you the money on. So we have to make sure that that's an adequate security. So you'd need evaluation, but you don't do any of that initially. You come to us, give you your decision in principle. What you then do is you go to your estate agent, you go and review your properties. Once you've seen one that you like, you put your offer in. Once your offer's accepted, you come back to us. We'll take the mortgage application from you. We'll instruct the valuer, because the valuation is for mortgage purposes. Okay, and we'll talk to you about getting a solicitor and what your solicitor needs to do, and we would take you step by step through that process, and we chat to you along the way. What you would need to look for with your solicitor, what are the good things to look for. Do I go by recommendation? Do I go by the cheapest? And we talk you through all that good stuff, and then once your mortgage has been agreed, you get your offer of mortgage. That gets signed off. You exchange contracts. You complete. You put your key in the door. You open that bottle of something fizzy, and then we all celebrate.
Happy days. Happy days.
Happy days, yeah.
Yeah, fantastic. So we've covered a few key topics, really. So just to summarise what it is that we've kind of been chatting about. So I think we've understood that deposits are often misunderstood, and it's not necessarily about getting a massive deposit. You can get 5% deposit. Yeah. So I think that's kind of okay that we kind of understand that now, and that we can get help from a family member if that's available to us.
Yeah.
But also to think about our general spending and little bits often can add up, as we've heard about the
Greggs man.
The Greggs man, yeah. The Greggs man, yeah. So credit concerns and scoring can be more straightforward than what people assume. Yeah. So just because you don't have a high credit score doesn't mean to say you're never going to get on the property ladder.
No, not at all.
It's about having that conversation, isn't it? I suppose in that one, to understand how that can be changed. Self-employed borrowers do have options as well. So you're not necessarily just going, oh, I'm self-employed, I can never get on the housing ladder, I'm going to be renting for the rest of my life. That's not necessarily the case. There are lenders that will help self-employed people get mortgages. And early conversations and preparation can make a significant difference. I think you alluded to it, didn't you? Even if you're thinking of buying a house 3, 4, 5 years time, it's always wise to speak to someone to get an understanding of what it is that you may well need and get those steps in place to get you into that position.
Totally. Yeah.
Is there after I've covered off the key points there, and as it's recorded, people can go back and rewatch it if they so wish. But is there anything that you'd like to add, Anne?
Yeah, I think for me, it's, and the conversations I've had over the many years I've been doing sort of mortgage advising, is many people rule themselves out of possibly being able to get a mortgage, and they don't explore their options properly. I think today's discussions has shown that the sooner that you speak to somebody and the more information you've got, then we can really help. And speaking to somebody like the Darlington, when we do look at each case on its individual merit, and there is a person there at every step of the way, I think that pays dividends, because we can sit and we can have a conversation, and we can understand you and you can understand how we work, and we just take you through it step by step. So yeah, I think start early. if you're thinking about buying somewhere, even if you haven't started saving for a deposit yet, come and talk to us and we'll talk you through the good stuff and the good ways of doing that.
Fantastic. That's brilliant. So I've just checked the chat there and there's no questions for us to answer. So what I'll do is I'll just kind of finish up now for everyone. You'll see our contact details are on the back of us anyway. Trevor, you've got a question there. Are you okay just to type it in the chat there for us? Is that okay?
Is that coming through?
I haven't got anything yet.
If it doesn't come through, Trevor, we can pick it up after the conversation and we can get back to you. I think you're still on. You're on mute, Trevor. If you want to come off mute, if you want to say your question. Generation length. Do I need my own? Oh.
Let me just double check. So you're doing a remortgage from another lender to us. Do you need your own solicitor, or would it be sensible for who I'm doing the remortgage from another lender to you? Do you need your own solicitor, or would it be sensible for you to do all the legals? So I'll let Anne answer that one for you. It's basically around the legal process of remortgaging and solicitors, and which whether we can support in that.
Okay, so Trevor, if you're remortgaging to the Darlington Building Society, you do have to have your own conveyancer. We don't supply the conveyancing or the legal representation for you, and that's a cost that you would pay as well.
Fab.
Hope that answers your question, my lovely.
Brilliant. If there's no problem at all, Trevor, thank you very much. I'm just about to go through the contact details, so if you do have any further questions, then you can contact us. You can see that they're behind myself and Anne as well on our screens there. So thank you for joining us this evening, and we hope tonight's discussion has helped separate some of those common mortgage myths from the reality. We'll share the recording and our downloadable guides and practical mortgage tips shortly after the session. If you would like to discuss your own circumstances further, our team would be happy to help. You can email us. The contact details are on the screen, and you can also book an appointment online at darlington.co.uk/mortgages, where one of the team will be in touch. Our telephone number is there as well. So just in case the screens are a bit blurry, as sometimes they can be depending on internet access and things like that, the email address is mortgagedirect@darlington.co.uk. And the telephone number, which is direct through to the team, so you don't need to go through a switchboard or anything. This telephone number will get you straight through to the Mortgage Direct team. It's 01325 741 035. And thanks everyone for joining us this evening.
Thank you. Thanks for your time.